So we just recently had the Fed meet, another 75 basis point hike. We did have some wording from the Fed about them understanding there's a risk of recession, them suggesting that future rate hikes are going to take into account as one of the things to be concerned about the impact on the economy, but at the same time, kind of continued verbiage around doing whatever it takes, even if it is a recession. So a lot of recession talk, along with the inflation talk. I wanted to get your thoughts in terms of where you think we are in regards to Fed rate hikes and the onset of a recession or a soft landing, which even Jerome Powell at this point seems less optimistic about a soft landing.
Yeah, well, soft landing. I don't really like that term. I mean, the economy is going to do whatever it does. In a sense, you could say we've had a soft landing already. We had 2 quarters at the beginning of this year that were basically flat, and now we've had a quarter in the third quarter, which was a +2 and change. You average those out for the whole year, and you're basically at zero. So in a sense, we've already had a soft landing. But let's see where we go from here. So, okay. A couple of things that I think are interesting about yesterday was that the FOMC statement afterwards did acknowledge that they needed to assess how what they've done so far is affecting the economy and whether, how that's going to affect them going forward. They seem to be a fairly dovish statement, which the market took very positively. And we were up 400 points right after the statement came out. And then Powell came out and started talking, and the market started to go down, because it was obvious that Powell was much more hawkish than the statement. He seemed to be much more about, saying that, we're not even close, essentially, to pausing. And I thought it was interesting because there came a point in the press conference where he was very pointed about it. He said, this narrative here that we have here is something I control. And that gave me the impression, maybe I'm wrong, but it gave me the impression that there's a split between him and the rest of the FOMC. That probably means, in my opinion, it's going to mean that they will go slower, because he's got to get some agreement from the FOMC. He wants to go, well, and I would say too, some point during the conference, press conference, he did kind of hint that 50 basis points was probably more likely at the December meeting. Personally, I don't think they should even do that, but that's my view. As for recession, look, we have an obvious slowing in the goods side of the economy. There's no doubt about that. We've seen ISMs now are under 50. The ISM manufacturing survey is under 50. We've seen the S&P version of that under 50 for a while now. And I've talked about this before. I'm not crazy about those S&P surveys. They don't have the history that the ISM does. They do cover a broader range of size of businesses. They get down into smaller businesses. ISM is more large business. But the bottom line is that the manufacturing side of the economy, the goods side of the economy, is pretty obviously slowing. At the same time, the services side of the economy continues to recover. We saw that again this morning with the ISM non-manufacturing index, which is, I think, 50, 55, whatever the number was, solidly above 50, put it that way. So I've said all along that, what we're doing here is we're normalizing. We've got the good side of the economy, which had become, was growing too fast, so to speak, was well above trend, I guess is a better way to put it. Is coming back down to trend, and the services, which was well below trend, is coming up to trend. And that's why we're sitting here at 0% growth. Now, is the Fed going to put us in recession? Well, look, I don't want to concentrate on the Fed. Let's concentrate on what the market's telling us. The market says, and what I mean by that is, let's look at the Eurodollar market. Eurodollar market now, we just talked about this in an earlier segment. The Eurodollar market now shows the peak in rates coming sometime after June. Sometime between June and September is when rates will peak and start to fall. That's what the market is anticipating right now. Now, look, it's just a snapshot. That's what it means today. That's what it's saying today. It might say something very different tomorrow. But that's what it's saying right now. And by the way, that moves around quite a bit. If you go back to the spring of this year, that peak in rates was sometime in the fall of 23, instead of now in June of 23, or sometime between June and September. Back then, it was somewhere between September and December. So it was in the fourth quarter, really. So it moved. And by the way, it moved all the way back to the first quarter at one point. where the peak in rates was actually looked like it was going to come in January. So now we've moved it back out to June. So I think think about what that means. If the peak in rates is sometime after June, you would not expect the recession to start before that. You would not expect the recession to start before rates peak. That doesn't make sense. If you go back and look at history, rates usually start to fall before the recession. Okay, so that means that the onset of recession is sometime after June. In fact, somewhere after rates peak between June and September. Say rates peak in July. Well, then the recession is going to come sometime after July. And think about that, what we were saying before about the yield curve inversions and so forth. The yield curve inversions can sometimes happen many, many months before the actual recession. So if you take the yield curve inversion, a 10-year, 3-month inverted in November, go to the average of the last 4 recessions, that's 14 months, you got recession sometime in early 24. Does that make sense if rates peak in July? Yeah, probably. That it depends on how fast things are deteriorating, but that would make sense. The point is that's what the market has incorporated from everything that the Fed's done, all the data that's incoming, all those things that are going on. That's what the market is telling you is the likely scenario at this point. We don't know that, again, we don't know that's going to stay that way. Look, I can just tell you right now that we're not in recession. I can't tell you the future. I keep saying this to everybody. It's not our job to predict the future. We take things as they come. Right now, we are not in recession, despite, look, there's a lot of people out there will tell you that we are in recession right now, and they are very adamant about it. And they are what they really are is very political about it. Look, there's a reason why Republicans want to tell you that we're in recession right now. They're trying to get elected. Of course, they want to blame everything on the Democrats. And if the situation was reversed, Democrats would do the same thing. But you shouldn't let your politics involve or taint your investments, because they can really mess you up. You can really make some big mistakes if you let your politics dictate how you invest.
Sure. So, I mean, I think one point you're making there is really important is just timing. And this could be a ways off, in a world with very short attention spans. But I think another point worth discussing is magnitude. Because when I talk to people, what I hear a lot is their memory of the last one, '08. Yeah. So I hear a lot of people when you start talking recession risk, they envision a repeat of 2008, something, got nicknamed the Great Recession. I think a lot of the data we look at, while there's certainly reason for some concerns in some overseas markets of something that could be pretty deep, when we look at the U.S., we don't really have concerns that the next recession is going to be a repeat show of 2008.
Okay, let's explode at least one myth there. There's a myth floating around that the fact that the 10-year, 2-year curve is inverted by 50 basis points is a big deal. And the fact that it's inverted by that much means it's going to be a very deep recession. Yeah, it doesn't have anything to do with it. History says, in fact, I will tell you right now, a 50 basis point inversion in the 10-year, 2-year curve, that's nothing. Listen, I can show you times in the past where the 10-year to the Fed funds rate was inverted by 400 basis points, not 50, 400. That's what happened in the 60s and 70s. Are we headed for that? I don't think so. But to say, and by the way, you had a big inversion in the curve, say in the 1980 recession, was very mild. You had a bigger inversion or a similar inversion like this in the 2000 recession, which was also a very mild recession. So the fact that the curve is inverted by some larger amount, that has nothing to do with the depth of the recession. What does have to do with the depth of the recession is the breadth of the slowdown. If you have a slowdown across services and goods and everything slows down at once, then yeah, you can get a very deep recession. And that kind of makes sense. Think about it. If you've got a recession that's focused on one industry, then there's only so many job losses you can take in that industry. Yeah, there's knock-on effects in other industries and so forth, but that one industry would take the brunt of it. But if you have a breadth of things that go bad, then you've got the potential for a deep recession. We certainly don't have anything like that right now, where we've got, again, ISM shows that service side is still growing, goods side is maybe contracting a little. So we're not there yet. That certainly doesn't say anything about the depth of the recession right now. I mean, honestly, I've said it many times. I can't predict the future. I don't know how that's going to go. I would like to see, well, you know what? Politics may have an impact here. Think about this. I'm a believer that this inflation that we have is about the fiscal side of the house. This is about spending. Now, it was spending that was accommodated by the Fed. If you want to look at it that way, that's fine. But it really is about spending. So if you get a Republican Congress and they block more Democratic spending, to some extent, that could be very positive for the economy. It could be positive for inflation. Maybe we do get a political impact here. Now, that assumes that the Republicans are going to take the House and the Senate, and it also assumes that they're going to concentrate on things that matter rather than, I don't know, something that doesn't matter. Politicians, to me, have the attention. You said something earlier about short attention spans. Yeah, politicians, it's even worse. They're going to concentrate on things that get them elected rather than things that are necessarily good for the country. So we'll see how that goes. But my point is, we have nothing right now that says this is some deep recession. I think you are talking about, recency bias, people thinking, oh, well, this recession is going to be like the last one. Yeah, it just doesn't work that way. Look, right now, household balance sheets, man, people have got a lot of cash. Corporations have a lot of cash. There is no credit stress out there. Credit spreads are under 5%. It's very, very normal and average. There's no stress out there. You don't have anything that looks like 2008.
Yeah, a different broad point too is, in 2008, before it happened, if you were paying attention, you knew there were some problems out there in credit markets. You knew what was happening in the real estate market might be problematic. There's just a lot of debt there. A lot of it looked bad. A lot of the products, you really started looking into it and you started getting a bad feeling. Now, when I look around the world, I kind of can feel the same way about China, but China's not the U.S.
Yeah, look, I keep hearing, oh, China's going to blow up. It's going to take the whole world economy down. I'm an old guy. I'm 61 years old. I've been doing this for 30 years professionally and 40 years as an investor. And I'll tell you something. I heard exactly the same thing about Japan when it was going through its problems in the late 80s, early 90s. Oh, my God, Japan's going to pull the whole global economy down. And it didn't happen. And you know what? I think, if anything, if China's economy cools, I actually think it's a positive for a lot of reasons, but primarily because it will reduce their demand for commodities, which is a direct input to everybody else on the planet has to deal with high commodity prices because of China. I don't know that it's a negative. Are they going to blow up their banking system? I don't know. They bailed out their banking system like 8 times in the last 15 years. They're going to bail them out again? Well, they'll probably try. I don't think they're just going to let them fail. It is a centrally planned economy. If they tell the banks to lend, they'll lend. If they tell them to reel it in, they'll reel it in. I don't know. I can't get worried about China. It is what it is. Whatever happens there is going to happen. And look, this idea that, this idea that China is some big, rival to the U.S. I don't want to laugh at it because I suppose they do see themselves as a rival, I suppose. But I got to tell you, I don't think they even come close to competing with us. They don't have the productivity. They don't have, a large portion of their population is dirt poor. We're talking about people living on a few dollars a day, for God's sakes. Their per capita income is like $13,000 a head. It's nothing. They're not a rival. And if they go down, they go down. I don't know. I can't worry too much about what the communist is going to do. What is she going to do? I don't know. He's not going to do anything smart, or otherwise he wouldn't be a communist. So I don't know. I'm not worried about that. Listen, Europe is a problem because of Russia and Ukraine. But, the fact is our economy is not that dependent on trade. It's just not. Europe's in recession. Does it have an impact on us? Yeah, it does. Is it something that's going to cause us to have a recession? No, not really. But there's the old saying that, if the rest of the world gets the flu, then the U.S. maybe gets a cold. But if the U.S. gets a cold, the whole rest of the world gets the flu. So, it depends on the order, I suppose. But the point is that the rest of the world's not going to drag us into recession unless it's even if it's World War. I don't know. Hell, Go back and look at the World War II. The start of World War II, the stock market was closed for a little while. It opened up, we were down a little bit, and then the stock market did fine in the 40s. Why? Because we kicked butt. Are we gonna go over to? Suppose we get in a shooting war with Russia that doesn't end up nuclear. Does anybody think we're really going to lose? That doesn't even make sense. These guys can't beat the Ukrainians, for God's sakes. These are people out there. These are farmers out there with pitchforks. They can't beat them. They're going to beat the U.S. Army? I don't freaking think so. So I don't worry about that stuff, man. Look, I got enough to worry about with our own economy and what's going on in our own country. Much less time to worry about what's going on in the rest of the world. I acknowledge it. I see it. All those things, but it's not something that's top of mind, and it shouldn't be for any investor in the U.S.
Sure, and I think that kind of just also goes to, in '08, the U.S. was good at selling securities to the rest of the world, and the real estate phenomenon wasn't just U.S. It actually was a global phenomenon, but we haven't seen the opposite. There's not a lot of U.S. banks holding Chinese real estate right now. There hasn't been a successful effort of the Chinese to securitize their debt and sell it to us. So yeah, I would tend to agree that those worries of a repeat of '08, those worries about us being interlinked to China and China dragging us down, they seem to be overstated at this point. We'll obviously follow data and watch what's going on in the market, but in terms of those concerns of those things driving a very, very severe '08 type event, we're just not seeing it right now, which doesn't mean you couldn't have a more mild type recession. That's certainly something that you have to think a decent probability.
Look, we could even have a bad recession. I don't know, but I don't think it's going to come because of China. It's not going to come because of Europe. I don't think it's going to come because of Russia. I just don't think those things are the things that would put us in a bad recession. And I'm not even, quite frankly, I'm not sure what would. I mean, there's only so much, I suppose, we can take from higher oil prices. That tends to be a traditional thing that puts us in recession, is high oil and energy prices. But at this point, with oil where it is and natural gas having come way off the highs, I don't see that as a big issue right now. So I don't know. The depth of the recession, I have no idea. I would love for it to be mild. I can hope. I don't know if that's gonna work or not, but I'll stick to that for now, because right now, all I can really tell you for sure is we're not in recession right now. That's what I can tell you for sure.
Sure. So that's kind of the plan, is be optimistic, but follow the data.
That's it. Well, what is it? Ronald Reagan, trust but verify. So
there you
we
go.
will trust that the economy is okay, but we're going to verify it.